Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DX Trade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too. So for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
Good morning, guys. Welcome back to another live stream. Hope you're doing well. I'm just writing down some notes here for the day. It is going to be a big one. We have the producer price index. We have wholesale numbers coming out here very soon. And in today's live stream, we're going to be taking a look at several markets. We're going to be taking a look at all sorts of different setups, charts, data, and most importantly, we're going to be watching to see how this number here today could impact the market. So when I'm talking about the market, I'm of course talking about the whole market, whether it be stocks or currencies or commodities. But again, here's what's on the table here for us today. We have retail sales and we have the producer price index coming out. Both of these numbers are really impactful to financial markets for a multitude of reasons. But real quick, I'll break this down. The producer price index or wholesale numbers basically will tell us it's a measurement of inflation, similar to consumer price index, which is the CPI for the kind of everyday consumption and the prices that are associated with it. That number is really important. We saw that earlier, recently. But then this number is kind of the complement to it. Are we going to see follow through? Remember, with CPI, we had hotter than expected numbers. The question here for today with the PPI is, are we going to see another kind of hotter than expected number? Or rather, are we going to see some contradicting numbers? If we see cooling data from the PPI and hot data from the CPI, that would kind of give you a mixed bag effect. So today, again, we'll be very keen to see what happens with this. This number, by the way, can very much move markets. Most people pay attention to the CPI, but the PPI is also very, very important. It has a lot of components that the Fed, in their preferred measurement of inflation, PCE, that is they've said that many, many times. That is kind of their consumer expenditure number is the one that they look at the most. Well, it shares a lot of components to PPI and CPI. Those factors, those inputs, what they have to say will impact, of course, the same way they impact PCE. So regardless, we get a measurement of inflation here this morning. That's the key point. And we also get retail sales. Let's break down retail sales. Why does this matter? Well, are consumers out there spending money? Are they buying things? Are they going to the store? Are they purchasing services? Are they paying for stuff? If that number is hotter than expected or higher than expected, that would show that the consumer is hanging in there. It would actually probably do well for a lot of specific companies. It would bode well for companies like, Nike and companies that are selling goods and services. How are those numbers? How is the consumer on a big scale level? So we get those two numbers here this morning. We also get unemployment claims, which I want to show you the recent trends in unemployment claims. We can pull that data up. Go to labor market statistics. Let's go to unemployment claims. And so we're going to get our latest round of unemployment claims here today. And the question is, in terms of unemployment claims, if this number is higher, that means more people are filing for unemployment. That would show that the labor market may be cooling down. That would probably increase in the probabilities of interest rate cuts coming sooner. So you have kind of a story there. But what about if unemployment claims do not come out hot? What if they come out kind of relaxed? Let's see what the forecast is, by the way. We're expecting forecast of 218,000. Previously, we saw 217,000 claims for unemployment. If that number comes out higher than expected, that will probably be weak for the dollar, right? Because again, in that case, showing some softness in the labor market, which if it does come to be that we see more softness in the labor market, that would be reiterating the theme we saw last week. Jobs numbers were cooler than expected last week. So again, a lot of data. We get a lot of inputs here today. With 9 minutes to go, we will be covering that. Let's take a quick look at the market, see how we're trading ahead of the main event here this morning. So let me go ahead and switch over. By the way, hello to everybody in the chat. I know I just blasted off a bunch of fundamental stuff, but I do want to just thank you for being here. Thanks for hanging out. Good morning, good afternoon, wherever you are in the world. Hope you're doing well. So again, what we're doing here is we are reacting to what is a big round of economic data. Let me also just reiterate, a lot of times during these sorts of events, we see the stream. Well, let me show you. The stream usually looks like this. So let's say this is the news moment. The stream does this. And then what happens? Everybody starts to leave. And it always boggles my mind that people just watch the spike. Because if you understand what fundamentals are really telling you, most of the value is what everybody's leaving. Because once you have the numbers in front of you, now you can actually make some more informed decisions. So I invite you to stick around. The stream gets better after the spike because now we have something to chew on, something to work with. Anyways, I want to show you where we're trading here pre-news event. We have the S&P 500 up, which is, no surprise there. It's up every day. The Dow, and then you have the NASDAQ kind of holding in there. In fact, the Dow, tech got hit the hardest here recently, which I thought was interesting, but we'll see where that one goes. The dollar index is off of its lows, which is also kind of a concerning thing. If you're watching the indices, if you also see a rising dollar, we'll have to keep an eye on that. That not always is the case that they have to move inversely to one another, but oftentimes it is. Euro dollar is trending lower here this morning. Pound dollar popped and is now giving back some of those gains ahead of the news. Again, looking to these numbers that are coming in a moment to give us some clarity on which direction these markets are going to want to move. Oil is trending higher here this morning. In fact, where are we trading on oil? I can't even see it. It got taken off the screen. Yeah, oil is making a move here above 80, which is an impressive push on the US oil market. And gold is pulling back. We're trading at 21.67 at the time. We'll continue to watch all of these markets, and I'll have updates for you with the numbers in front of us when they do show up. I also wanted to just make a quick shout out to the A1 team. We've worked really hard in the last 24 hours here to update and improve our retail sentiment. Not only that, guys, we've got new assets, and this is kind of a secret, but kind of not. Check this out. We've got some new assets coming to the Edgefinder. Platinum, silver, copper, right? Some more commodities, some things like that are making their way into the Edgefinder. I'm really excited about that. Iron ore, right? So you've got some new components, some new additions to the Edgefinder's retail positioning. Of course, this is showing us where retail traders are positioned, generally speaking, on your favorite currency pairs, commodities, indices, etc. Where we see right now, a lot of traders on the indices is they're very short biased, right? So that's a little bit concerning. I've been kind of staying on the sidelines for that reason. We'll see how that plays out. But indices, retail traders are typically very short. If you take a look at some of the metals here this morning, gold, by the way, is closer to this extreme. So we see gold almost getting a contrarian reading. By the way, contrarian on the Edgefinder is anything over or under 60. So for example, NASDAQ is getting a bullish reading overall because retail traders are 61% short. On the other side, you've got a bearish read for copper as an example, because there's an 80% of positionings are on the long side, right? So something to think about is that when contrarian kind of signals are the idea that when everybody gets parked on one side of the ship, we want to make sure we're not there if it's to flip over, right? Anyways, updates on the retail positioning are really exciting because we've got a lot of things added here. We've even added, and I think we do, we've got Ethereum now coming into the Edgefinder, which is really exciting for my crypto friends. We are bringing some more cryptos into the Edgefinder's stuff. Commodities, of course, we've got oil as always, indices, right? You can select by what you like to trade. So if you're somebody who's just an index trader, you can select indices for yourself. If you trade metals, here's all your metals, right? Everything from gold, or iron, silver, copper, platinum, etc. Kind of cool. But anyways, there's the full list. The updated list is ginormous. So we have got some cool new updates coming to the Edgefinder. To those of you guys who already have it, that will come to you totally free of charge. All updates, all improvements to the Edgefinder are yours for free if you already have it. So enjoy the new stuff and get ready for a lot more of it because we got some good stuff coming. Anyways, yeah, oil is making a move higher. The dollar index trying to stab higher here this morning. And again, we are just about 3 minutes out, guys, from the numbers. I am excited about it. A lot of traders, they don't trade news. And let me reiterate something. I absolutely am not an advocate for trading the spike of the news. So what I mean by that is I'm not dropping down to the 5-minute chart and putting buy stops and sell stops. Because if you think the market is that easy, welcome to the most difficult thing ever. Trading is way harder than just putting a buy stop here and a sell stop here and you think you're going to make money. The reason you're not going to make money doing that long term is because brokers, if you put a buy stop here and you say, okay, yeah, if this thing goes up, it's going to go straight up and I'm going to make a ton of money. Well, what happens is that you put your order here. Remember, your order, your buy stop, that is a market order. So when it fills you at the best possible price. But if the gap is huge, you actually get filled here, right? So if there's a huge gap in price and you put a buy stop here, right? A buy stop order says when it crosses above this level, fill me at the next best possible price. But if the next possible price is here and then the market initially, like it jumps here and then jumps down, you can get crushed, right? So a lot of traders learn that the hard way. Do not do that. I'm telling you, it is a very, very dumb decision. It seems intelligent in the moment, and then you do it for long enough and you realize the brokers are not going to let you print free money like that. It's not how the world works, unfortunately. Money is precious to the broker just like it is to the rest of us. So brokers don't want you to do that. Now, they're not being predatory. They're just widening their spread so that they don't take on a massive amount of risk themselves. Anyways, because remember, a lot of brokers, they have to, some of them are market makers. They're taking the other side of your trade, which is not always an evil thing, by the way. And at the same time, some of them who directly process it to the market, the next available price in the market is way up here. So you have a buy stop here, you get filled here. It's not the broker being predatory. They're filling you at the next possible price. It's just that it's not until it gets up to here, right? So you have to be very careful. Do not, in my opinion, stay very far away from trying to buy stop and sell stop news. It's very, very foolish. Anyways, gold. We are coming in close, guys. We got 1 minute to go. Let me go ahead and set up my screen so that we can see all of it here at once. Again, just a quick recap. We've got your indices in the left, right? You got euro and pound, dollar here, gold top right, oil bottom right. Okay. And we are coming in very close. We're going to go through all of the news numbers. There's 800 people in here. Make sure to hit that thumbs up button if you haven't already. Very much appreciate it. And now we're going to go ahead and do our breaking news. All right, coming in here. Let's see what we get. Retail sales and the producer price index coming out right now. All right, we're seeing an initial blip lower here. Dollar index is up initially. Let's see if we can get the numbers. So remember that both PPI, I mean, all of these matter here to the market. Let's see how we're getting reaction. US 30 is down slightly. S&P down slightly. NASDAQ down slightly. Dollar up. Pound up. Euro down. I'm sorry, pound down. Euro down. Gold down. Oil up. So let's see what we've got in terms of the numbers. Somebody had a question. Emily dropped this. If you guys ever have questions, please feel free. If you have any questions, you need any help with, whether it's a software related question or any of our services, etc., we'll drop the link here again. Chandler will do that for us. You can send a direct message to our team using this link. All right, so we got the numbers here, guys. Let's take a look. Retail sales. Let's do that one first. Retail sales came in core a little weak, retail sales weak. So some softness in the retail sales number. That's big, right? At the same time, you got hot inflation. Okay, I'm going to say that overall, this is generally painting a more bullish gold situation. Maybe not initially in the price reaction, but let's look at this. So softness in the economic reads, right? Retail sales numbers came in soft. Okay. Softness there. Inflation stubbornness. Again, we've gone over this many times on the channel recently. Inflation stubbornness plus economic confusion or slowdown means very bullish for gold. That combination is the sweet spot for gold. So unemployment claims also came in. They revised, improved the last number. So jobs data, a little bit of bounce back in the jobs data. Let's go take a look now at where gold is at, because I'm curious about this. Now, I am already long gold. I have 2 positions on gold. So let me pull that up really quick. Gold is down 0.5%. I have 2 positions on gold. One initially back here at 2,030 an ounce, which obviously looks very good right now. But I added a second trade here recently on this pullback. Let's drop down to the 4-hour chart. So this is where I entered. I added a secondary trade to my gold long situation. My stop loss is very tight here. So if price does break through this, I'll totally get out of my trade, of course, sticking to my risk management strategy here. But let me just kind of reiterate that these numbers here today, in my personal view, don't threaten too much the bull case for gold. Let's break this down for a second. We got PPI. Okay, let me do this. PPI. And we had retail sales. Okay, so these numbers are important, guys, because here's what happened. PPI showed still stubbornness and stickiness in inflation. This is going to not necessarily be great for gold initially, right? So the case here for this is like, oh, well, yeah, Nick, that's going to be strong for the dollar, and they're not going to cut rates as soon. So you might say, well, sell gold. But the other side is we're seeing more evidence here that the economy is slowing. Maybe not recessionary, but retail sales here this morning were again more evidence that the economy shows some slowdown in it. And if that slowdown is happening at the same time as sticky inflation, that trend, if that continues and becomes a bigger trend, and a bigger divergence continues to happen in these 2 sorts of numbers, right? The inflation here, the economy here. If we continue to see divergence in that, in the way that we're seeing it, it's a very bullish catalyst for gold longer term. Because what happens is that this number keeps going down and the Fed says, okay, we don't want unemployment to slide. We don't want the economy to slide too much. So we're probably still going to cut rates. But they still have an inflationary problem too. That combination causes a lot of concern, and concern is the middle name of gold, right? I don't even know what the last name. XAU, concern, USD. That's gold's full name, okay? Or you could swap out concern for fear. But the idea is basically, if you get that combination, I actually don't think that this is super bearish for gold at all. So fundamentally, I stay bullish on gold. Technical analysis really quick. If we scoop through the lows and we break through that, yeah, I will totally close out all of my trades for a profit. Now, this secondary trade won't be doing so good, but this is where I added to the trade. My initial trade was back at 2,031 an ounce. So if we get stopped out here today, I'll take profits on the whole position, but I don't hate this number here for the overall story. I really also am curious. Silver's doing quite well. We broke through the highs. I actually trailed a stop again yesterday on my silver long position. Let me pull that up just to see where we're at with silver. SLV, I'm up 822 on silver, and on gold, I'm up 5,766. So my position is obviously bigger on gold, but I'm very much liking that silver's hanging in there, right? In recent times, I would imagine that silver would be down much more than this. Silver would be down 1.5% on a day that gold is down 0.5%. So I find that very interesting. Let's go back really quick. I just want to check Bitcoin here as well, see the reaction similar to gold. Okay, about down 0.5%. Here's the S&P 500, just teetering at the highs. To me, I've mentioned this before several times. I think this looks top heavy. I'm not shorting it. I don't like to short the S&P 500. It's probably the hardest trade in the entire world. But I do think that I will continue to stay for the time being heavier on the cash side, heavier on the waiting for an opportunity to buy S&P. So I am looking for a chance to buy it, but I think it's due for a correction first. And if it's not, what's my risk? What's my risk to staying heavy cash? I'll tell you what my risk is. My risk is that I miss out on a bigger move. If it keeps going, it keeps going. I accept that, right? You have to be able to, if you're going to wait for pullbacks, whether it be the S&P 500 or anything else, you have to accept that you might be missing something. And for gold traders out there, you might feel the same way right now. You might say, well, if I can't get a pullback down, 50% retracement, then I don't want anything to do with this, or a 61.8% retracement. I don't want anything to do with this unless it pulls back for me. And I think that that's a respectful, a respectable kind of approach to this. So, yeah. We'll see how it plays out. Overall, I want to go take a quick look at the top setups page on the algorithm really quick. And interestingly, gold is getting a neutral score. Let me update this really quick. Gold getting a neutral score. What has changed? I'm going to go to the scanners page. Interesting. Okay. Institutional money, we're all bullish. Retail positioning is mostly short, but not quite contrarian levels. If that ticks up a little bit higher, if gold goes higher, it will probably trigger this to get more short. That's usually how that goes. Like the higher gold goes, the more retail traders are getting short on it. And vice versa. If it's going down, it usually is a thing where retail traders are more getting long on it. Interesting. Top setups, again, kind of looking light here this morning. Euro CAD, Euro Kiwi, Euro dollar. Very interesting. On the flip side, we have Bitcoin looking almost bearish, which is fascinating. USD ZAR, kind of in the sell range. We do get COT data, fresh COT data tomorrow. For those of you guys who are Edgefinder users, this will update. We can see our update log up here. That will update tomorrow afternoon, US time. And we'll get a chance to take a look at the latest moves. I'm very curious to see what that comes out. This past week, we saw a lot of accumulation of gold and silver, but it's not the first time. I've pointed out this chart many times because I find it to be fascinating. I'm going to switch over to gold here. This one might take a second to load. The Edgefinder is always a little slower if your computer is working hard, and mine is working hard when we stream. Okay, so this is smart money versus retail money when looking at gold's price. And this is really key. So big money, and I've made this point many times, but I like to use this as an example for how COT data and retail positioning and all that stuff, why it's so impactful. Okay, look at this. The net COT positioning started to get really heavily long late December, early January. There was an accumulation phase, it seemed like. But then you can see the white represents the price of gold. The price of gold was just kind of trending down and sideways and not really going anywhere, trading around that 2,000 mark for some time. But the bigger story here is that big money was staying positioned bullish on gold, and then it exploded. And look what happened. Retail traders started to really hold the bag. So the red line, guys, represents retail positioning. And retail positioning has started to get very bearish in recent times. It's come off a little bit of its bearishness. We'll get the latest print. I think it'll probably look like that, because the gold market has pulled back a little bit and retail traders typically are just counter trend. So what I find very interesting about this move is that when this thing started to explode in price, you had institutional money long, retail traders getting short. Fascinating. And again, it's like I've been doing this for a long time, and on these markets, gold, currency crosses, indices, this is a recurring pattern. As markets trend one way, retail traders are fading it and getting, usually destroyed, right? They're usually selling a rally and buying a sell-off. And when that happens over and over and over, it's a pattern that is recognizable and tradable. So that's how we trade that within the Edgefinder. If you'd like to trade alongside this sort of strategy, if you'd like to try out the software, I'm going to do something really quick. We're going to drop a link here in the chat to where you can sign up for a trial of the Edgefinder. You get 30 days. If you guys would like 30 days to use our software, I'm going to share some information with that in the chat. Someone from my staff here, Chandler, will put a link for you guys to fill out an application if you're interested in doing so. Again, click this link. When you fill out that form, someone from my team will get you some information about the 30-day access to try out the software. So there you go. Thank you for stopping me from trading the spike, Nick. Kevin, you just got to consider all things before trading a spike, because again, spikes are incredibly tempting to new traders. You always see people posting on social media like, look, I made $5,000 trading NFP or whatever. And they don't show you the many times where they get whipped out of $15,000, right? They take a huge loss. There goes the S&P doing its classic move here, guys. Sell off on the news and then rip higher again. This has been such a recurring pattern. It's been kind of crazy how many times this has happened. It's like every news event that shows some not so great numbers, the S&P, the NASDAQ, et cetera, will skip down and then grind higher. And it's the resiliency of this stock market right now. It's so hot. It's so strong. And that can go on for some time. I've mentioned that for me, I need a pullback, but the market may not. It may just keep pushing higher for another month before it pulls back. Who knows? Right. So I'm not timing a pullback. I don't know when this market pulls back. It just wants to keep going. It seems like I will be I will be patient on it. I'm not going to touch it. I'm not going to chase it, because I think your risk reward here, I'll say this, I think the risk reward on the S&P and the NASDAQ right now is not great. I think if you think about like, okay, my thought is buy here. Well, you may see it grind higher for a little bit, but what about when you get a healthy corrective pullback and that looks, like that? Suddenly your risk reward looks pretty terrible if that's the case, right? Et cetera, et cetera. Are there any perks to those who've been a member of A1 Trading YouTube channel for 1 year, 7 months? Nope, no perks. Just kidding. Ivan, you're a funny guy. You guys know Ivan comes on the show all the time. He's one of our regular guest hosts that come onto the stream. And look at that, guys. Gold, I will say this is playing out okay so far for gold. Gold pushed lower and reversed here. Again, kind of what I thought would happen with gold. I mentioned as it was coming out that a hotter print on inflation and cooling in the economy, that combination is not terrible for gold. In fact, it might be very good for gold. Initially, the market's going to react and say, "Oh, inflation's hot. They're going to keep higher rates," and that's not great for gold. But you combine the full picture, hot inflation, but at the same time, the economy's cooling off with retail sales here today. I think you've got a full picture that's looking a little bit more bullish for gold. So I'm staying long. If we rip higher here, I'll trail a stop tighter, lock in some more profits on it. But for now, this is going on day. I don't even know how long I've been in this trade, for a couple weeks now. I added a new position on this pullback here recently. Hardly a pullback, but again, I'm very bullish gold. So we'll see how that one plays out. Real quick, we're going to thank our sponsors here that make the show possible, and we'll be right back after that with Miko and Marco for some technical Thursdays, talking setups and charts coming in right after this.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edgefinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, guys, and we are back with Miko and Marco for Technical Thursdays. How you guys doing?
Hello. I'm good. Hello.
Good to see you guys back on the show. And let's jump right into it. Markets are moving here this morning. We got some fresh, some interesting news candles to play around with. I was just pointing out something, guys, that I thought was interesting. The S&P 500 is just in rally mode. And this morning, I would say you got something that was not great news for the S&P. And yet the spike down, this recently has been going on consistently, has pushed back higher. Stocks are interesting like that. When they get really bullish, it takes like nothing can roll them over. Kind of a crazy behavior in stocks, but also kind of a similar, it's also kind of got a little bit of a resiliency to it with the recent rally. But we'll get more into those things in just a moment. I want to start out by letting Marco take over for a second to show us what he's looking at. You've got a set of current to look at, so feel free to share your screen. You got it all set. We'll let you take the floor for a second.
Sure. So for today on my watch list, the euro and the US dollar is not. It's looking on the 1 hour very flat, corrective, and range bound. So I'm looking for large momentum up or down. Let's skip this one. It's not good. Euro Japanese yen, I did take a flag trade here. I was counting on this momentum to continue. It didn't happen. I got stopped out. So this was a loss. Right now, this may be just a pause before price continues up, but I'm still waiting for that large push up for me to even be interested to get in on a buy setup. Why do I like buy setups right now? Well, because on a larger scale, I am seeing like a descending channel. And what I know is usually after a descending channel, price tends to start trending to the upside. So that's the game plan on EJ. Aussie US dollar, I'm trading the new range bound entry that I back tested. I'm waiting to see what happens in these areas. I have my alerts set. Again, this was a large news candle, and then this is a clear flat range. So I'm waiting to see if price can reject in these liquidity areas, and I'll be very interested for basically selling the top and buying the bottom. So something like this. And aiming for a 3-1 with a 10 pip stop loss. That's my current criteria for this kind of volatility. So yeah, that one is on the watch list. And then we have AJ, which is slowing down right here. So I'm not seeing much on AJ. Pound US dollar, flat in this general area, more corrective. I am looking to see if maybe this overall uptrend can continue. And if this was just a pullback on the higher time frame. So I'm looking for a push up, but still didn't get it yet. So just leaving it alone. And NJ is on the watch list. I do like this very clean ascending channel, after which I do expect a nice downtrend to start. So price is clearly breaking the highs and retracing very, very correctively, not showing absolutely any bullish momentum after we break these most recent highs. So I'm waiting for that nice candle down like this. Let's see if this one can close with a nice clean close. Then I'll look for sell setups 100%. So that's my game plan for today. Got some news candles, but yeah, no trends yet.
Yep, fair enough. Well, Marco, I wanted to ask you a really quick question about the
Hmm.
range-bound style of trading that you've talked about. When
Hmm.
something comes up to your level, I think it was AJ or one of the ones that you were looking to trade a range on.
Hmm.
Um,
Hmm.
when something gets up to those levels, is it just let's say it rallies higher, hits the top of that range? Is that just a sell as it hits it, or are you looking for like some sort of confirmation?
Uh-huh.
How would you enter a move like that?
Well, I'm looking for a confirmation. So this was a good example. I identified the flat range. I identified the liquidity areas below and above the range. So this is one. There was the one above as well.
Mhm.
And here there was a push into the liquidity, clear rejection with the blue candle. That's where I go in with 10 pip stop loss, aiming for a 3 to 1. That's the basic game plan, looking for somewhere either the opposite liquidity area or basically like the middle of the range. It's up to you, but usually 3 to 1 is the best with a 10 pip stop loss for these current market conditions. So I'm not just blindly buying when the price hits the level. I'm looking for that bullish candle, for that clear rejection, and
Cool.
possibly a wick as well. You can see double wicks on the bottom. That's what I like.
Awesome. Very cool. Yeah, I'm excited to hear more about that strategy over time. It's a cool approach to have a mix of. We talked about that last time at length. Just various types of strategies for various markets. Miko, what's on the watch list today? And, lots of movement in the market recently. Are you in any trades? Or are you watching any particular setups?
Yes, so I'm currently long on Aussie dollar on the
Mhm.
4H time frame. I'm looking to see if we can take advantage of some dollar weakness because last week I was speaking a lot about taking advantage of some dollar weakness. We broke through a really strong level of support in the DXY, which I'll touch on in a second. But yeah, on the 4H time frame, I have spotted this bullish structure here: high, higher, low, higher, high, and I'm looking to see if I can take advantage of the next higher low. And there's a lot of room to the upside for this Aussie dollar move. I'm looking to see if we can potentially come up to the highs there. We'll be trading a stop loss in this position, so it just depends how far price takes me. But I do think we can go pretty far. I'm also keeping an eye on dollar CHF. I'm liking this one to the downside. We do have a pretty established bearish trend on the higher time frames here, and I'm looking to see if we can form another swing high and possibly another move back down. So this is a bearish swing opportunity I'm really interested in. However, I do need to wait for price to actually start breaking through some support first. That'll be very much appreciated. And then I'll be looking for my opportunities. We already failed at the highs here. So that's like the first sign that maybe this bullish move is starting to come to an end and maybe we could be looking to push back down. So I will be looking for break and retest on this area there as well. And touching the DXY briefly, we've already had a really strong move to the downside. And I do think there is a lot more room. Personally, I think we can make our way back down to this support level. A lot of key tests of this area. We came back into another area of resistance, failed to break through. Really strong reaction. I do think there is room to the downside. So with that kind of bearish outlook on the DXY, pairs like dollar CHF, I'm looking to short Aussie dollar. I'm currently long. I do like Euro USD, but until I get my Aussie dollar position to break even, I'm not going to jump into that pair. But I have been looking at for a break and retest of this area, which we're not really close to. But if we get there, I will see. But of course, I do need to get that Aussie dollar to break even. So I'm kind of dollar orientated about now. I do like some counter trend opportunities on some Swiss pairs, some yen pairs, sorry. CHF JPY being one of them. I'm keeping an eye on a retest of this level here for some downside, but I'm mainly focused on dollar pairs for the time being.
Very cool. Yeah, I think it's interesting the way you laid out the Australian dollar and just generally the dollar crosses seem to have rolled over. We talked about the dollar index last time, um,
Mm-hmm.
and despite some of the hotter inflation reads, still looks like the dollar could be coming down lower. We're seeing a lot of slowdown in the economy, and the dollar index, at least from the technicals, has really broken that upward steam that we had. And I think that if you do start to see the probabilities of interest rate cuts come sooner or more aggressively, it's not out of the question that the dollar could make a move back down to this previous low that we formed right around the turn of the year. So very interesting just to see that dollar index move higher, start to fizzle out, start to fade, and start to move lower. We'll see if that does continue. Of course, one benefactor or sort of a market that benefits from a weaker dollar is not just the other currencies, but also gold. Gold has been flying high recently. It's broken out. I think since the last time we've spoken, Miko, we talked about how gold was just in this very frustrating range. It seems like we've broken that theme. And I'll come back to Marco on this too, but I just want to, while you're still on the topic of dollar, what do you think about gold here? I mean, is there if you're not in this move, what are you thinking in terms of like pullback opportunities, or do you even touch the thing when it's made such a big move? What do you think?
So yeah, I'm still pretty bullish on gold. I do think gold has, a lot of room to the upside despite it being at all-time highs. However, in terms of actually trading it, I do have a level down here, which I'm looking at 2089 roughly, which is this high here. So this was the level I was looking at originally when we had the breakout last week, and then it just kept going. So it's kind of left me behind a little bit. But this for me is the only valid area which I would buy gold from. There's no other area that makes sense to the way I trade. So I'm kind of looking to see if gold, it's a bit of a move, yes, but I'm kind of looking to see if it will pull back to this level. If it doesn't, and it just continues, then it continues without me. But I'm definitely very bullish on gold. So my kind of focus is steered more towards silver, which I think has a lot of room to the upside, because this one's nowhere near its all-time highs, which is all the way over there. So it's got a long way to go. So I'm kind of just waiting to see if silver can break out, give me some pullbacks. Silver's been in an ugly range for a while, so a break outside of that would be very, very interesting to me, and I think there's a lot of room to the upside as well. So yeah, I'm bullish on gold, bullish on silver, but because silver just a bit more in a better area for me to trade, I'm more looking at break and retest on this one. I'm kind of letting gold do its thing. So yeah, that's kind of where I'm at.
Yeah, and Miko, I think you mentioned silver there. I have a long position on gold and a long position on silver right now, and I think that in terms of silver, it's so important. It's such a not talked about market. Like people don't. It's not like a popular thing to trade. It's not a popular thing to follow. But I think it's really important if you are somebody who trades gold that you also keep a close eye on silver, for the reasons being that during major metal market cycles, like when you see big runs, and I went on a whole tangent rant on this yesterday, but I'll keep it brief. Basically, when metal markets run, historically speaking, usually silver actually outperforms. And so if the metal market is going to run again, if people are thinking, hey, metals are here to stay, they're gonna rip higher from here, then your concern should really be on silver, because if silver can hold in there, it's a good sign that gold will probably also go well. Usually what happens is it's kind of like a moving average crossover. Let's say that the red line here is gold, and let's say that the blue line is silver. This is usually how it should look in terms of performance, right? On the downside, silver is going to get crushed harder. Gold's going to be a little bit more stable. And then when it flips, gold will start kind of turning sooner. I guess you could make it a little bit more. You get the point. Gold will start moving higher sooner usually, but then if it really lasts, silver will start to really outperform. And that's a very interesting point that you brought that out. It's been a very long period of consolidation for silver. It'll be an interesting market to keep an eye on, especially if you're somebody who trades and watches gold. Speaking of that, I wanted to ask somebody who does not trade gold, but is a person who always gets forced to comment on it anyways. I'll ask Marco. Marco, what do you think about gold and silver? And even though you don't trade it, I know it's still just kind of, it's like the dollar index. Like you don't trade the dollar index, but it's still an index to keep an eye on,
Yeah, definitely important to cover it. So on the 1 hour chart, slow down this flat range right here. So yeah, it's looking to be exhausting the upward trend. But before that, definitely some very clean price action. I can see like a flag formation. I would be very interested to take here as well. Oh, this is looking really clean. I should take a look at gold, because this is showing some really nice price action. Like these candles, these nice blue candles, is what I love, and they're not that like they don't happen that often. They happen very rarely, I would say, consecutively like this. But yeah, clear slowdown on the top. So I would wait for the momentum to kick back in. If I was looking for buys, I would wait for something like this to happen again, because this is absolutely perfect. Two of these are flags, which I would be 100% taking if it was on like the euro and US dollar, let's say. So I would wait for this sort of momentum to kick back in from this range.
Yeah, and it'll be again, I think when I started this year, my target on gold was 2280, which sounded kind of crazy at the time, but I'm now feeling like I might even need to expand my target on that. Of course, nobody knows the future, and targets are just kind of fun thing for me because I really don't even trade with take profits. So it's just like a general fundamental kind of opinion that I'll set forth is, and this year I do think that there's a lot of room for metals to have a big moment. So we'll continue to watch them. They're always an interesting kind of area to focus on, and the crowd loves them as well. So lots of gold traders in the building. So yeah. With that said, I do also want to just say, for those of you guys who are hanging out with us live, Miko, Marco, they do have their own YouTube channels. They put out a ton of great content themselves, totally free value, and they're voluntarily coming on to this show. So I just want to say in the audience, if you guys could drop a thanks to Miko and Marco, that would be much appreciated. And also make sure, click the links that we're dropping in the chat to go find Miko and Marco on their own YouTube channel, subscribe, show them some support, thank them for coming on. And Miko and Marco, I just want to say again, thanks for coming on and always making the show awesome on Thursdays.
Appreciate it.
Oh, and have you been looking at Bitcoin maybe?
Oh yeah, we've been on that theme. We got to at least look at Bitcoin. I'm glad you brought that up. Bitcoin. So, man, Bitcoin's been a weird one. It's trading closer to gold and silver than it is to stocks. And that's kind of changed its pace. What do you think, Marco? Do you think Bitcoin has more room from here? We're at 73,000 per coin. That's crazy. In the last few weeks, every time we come on here, it's like up another $10,000 per coin. So what do you think? Is it gonna keep going?
Well, I think in the past, after it broke the most recent or the major high, it kind of exploded up. And this time it looks to be kind of slowing down if I look at this 4-hour chart, right? Usually you get like a super big momentum move up. So this is something like uncharted territory, I would say. And I'm not sure what would happen. The technicals are telling me this has reached the top and it's gonna correct. But again, with Bitcoin, you never know. Like the technicals kind of go out of the window with Bitcoin.
It's kind of a crazy. I've mentioned this before. I don't know how to counter trend trade Bitcoin like that. Like there's no strategy that I think that is nothing that I see that has a lot of merit to trying to counter trend. And now if it flips and starts trending bearish, then I see that. But very, very crazy stuff. Miko, what do you think? Bitcoin, next time we speak, is it going to be higher or lower?
Well, that seems to be a really current theme. Every time we speak, it goes up another 10K. So might be a buy signal. But yeah, I mean, what Marco said with the way prices move is very corrective, especially at all-time highs as well. That doesn't give me much comfort to do anything with Bitcoin. And now I'm a trend trader, so I'm looking to follow momentum, but it does look like momentum is starting to stale and getting a little bit dry. So I would be really apprehensive with Bitcoin. I think if we can see a healthy correction, that could be a nice time to jump in, but I wouldn't touch it with a 10-foot pole right now.
That's fair enough. I think that's just some experience speaking. I'd feel the same way. So again, thank you guys both for coming on. Make sure, guys, go find them on YouTube. Go show them some support. Miko, Marco, thank you guys. We'll see you next week.
Appreciate it. See ya.
Bye.
See you guys. All right. And yeah, guys, always good to have those two on. I do also want to mention, if you guys aren't already in our Discord channel, I'm just going to drop the link here for you guys. If you're not already in there, a couple things. Of course, we got some cigars being smoked and all sorts of good stuff. This gentleman actually he got married and put it in the chat. It was awesome. Anyways, if you guys would like to join our Discord channel, we post a ton of great stuff in here, a lot of free value in the community. So if you'd like breakdowns and analysis from Frank and myself on trades that we're looking at, all that good stuff, we're going to drop a link. Here it is. Click this link, join the Discord channel. And really quick, as we're doing that, I am also going to do something cool, just as a special thank you to you guys for hanging out. I'm going to really quick just drop a link here. As you join, I'm going to type something up. We're going to give something away here today. If you join the Discord, message Emily for our free course. Just send her the words free course. Okay, you guys are joining. I can see you. If you just joined, go to new member, go right here, and then just send Emily free course and she'll send it over to you. Again, it's totally free of charge. There really is no cost to it. It is genuinely a free course. If you're somebody who's looking to learn to trade, you're looking to improve, join our Discord. There's plenty of free value. But while you're in there, just shoot a DM to Emily. She's one of my assistants here at A1. She can help you with getting the free course totally free. It genuinely is. So take advantage. Join the Discord. Lots of value in there. And appreciate you guys for hanging out with me today. That's going to wrap up the stream. And with that said, we will see you guys back on the next one. Have a great rest of your day. Trade safe. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering a 7-day free trial and 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30 for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.